think we'll see almost certainly a cut in May. But I don't think the Reserve Bank's going to be panicking at this stage. And so I think market expectations for up to 5 cuts this year are overdone.
What do you think of the financial market pricing in a better than even chance of a 50 basis point cut in May? Could that eventuate?
It could, but I think we need to see a lot more before we would get there. Remember, the Reserve Bank bails out the economy, not financial markets. And so it's not going to be responding to the fall in financial markets per se, it's going to be responding to what it thinks the economic implications might be. And so it will need to see a lot more data on exactly how other countries are responding in terms of tariffs and also how they're going to respond in terms of stimulus.
The markets are clearly concerned enough. They're repricing risk right now. Is there a chance that the RBA could hold an emergency meeting to cut rates before May 20?
I think we're a long way from the Reserve Bank needing to bring forward their meeting to have a cut in rates. Because at the moment what we're seeing is things are still functioning well. We've got a large repricing of the markets, but asset prices had been very high. They'd been going up very substantially. Some of that's been removed now, but for the time being, the economy is still operating very well. We've got a very tight labour market. You know, things are generally going pretty well. There's some slowing in some data, particularly internationally, much less domestically so far.
Have you changed your forecast for the path of interest rates this year?
I have. I mean, I thought that May was not a certainty. I now think that May will be a 25 basis point cut. But beyond that, it's really hard to say. I think I had been thinking maybe 2 cuts this year, probably more than that now. But I think 5 is too much.
You say things have been going along quite well, but the Australian dollar has fallen against the greenback. Indeed, for part of the day, it was trading in the 59-cent range. Yeah. Is that nearing levels that would force the RBA to consider intervening?
The Reserve Bank's very unlikely to intervene. The Reserve Bank will intervene if the exchange rate market is dysfunctional. So if there aren't people on both sides of the market. That's not what we're seeing. The Australian dollar normally depreciates when we have one of these risk-off events, and that's actually beneficial for Australia. It helps to stimulate growth. And so that's what we're seeing. So I think it's actually a positive development that the exchange rate's depreciating.
It's going to help our exporters at this time?
That's right. It helps our exporters, and it also helps those people who are invested in foreign financial assets because the depreciation of the Australian dollar offsets some of the fall in foreign asset prices.
The US investment bank Goldman Sachs estimates the impact of Trump's tariffs on China's growth rate could be as much as 0.7% this year. That isn't such great news for Australia's economy, is it?
No, and that's identifying the primary channel that Australia is going to be impacted by this. So only 5% of our exports go to the United States. So we're less affected by the imposition of tariffs. But obviously we have a large amount of trade going to China. And so it's the slowdown in China and in Japan and the rest of Southeast Asia that's going to affect us to a greater extent. So the more that they respond economically, the worse it is for Australia.
Is the Treasury modelling that's been released today of a 0.1% hit to Australia's GDP a bit too optimistic?
Well, I mean, I think when they were doing that, they were probably hadn't seen the full extent of things. And so the fact that other countries are retaliating to the US tariffs, that sort of compounds things and so will slow growth in Asia to a larger extent. And so that's when it will start to affect us more. So I would expect that there is a fair chance that we'll have a larger response to Australian GDP than that 0.1.
Are you at a position yet where you might be able to estimate just how large that could be?
Look, I think it depends so much because we haven't seen whether, the full extent of the retaliatory tariffs from other countries and the extent to which they stimulate their economies. I mean, even recently, China had been forecasting that their growth this year would still be 5%. And that will require a large stimulus to get there, but they will do that. And so that will cushion Australia to a large extent.
That said, global investment banks say the recession risk in the US is going up. Does that mean Australia's is also?
Well, it will. So, I think history is going to put this down. If you think about the 1980s as being the recession Australia had to have, this will be the recession that the US did not have to have. You know, they went through having a large spike in interest rates and a large spike in inflation and did not have a recession. And now there's at a risk of a recession, and it's an own goal, completely inflicted by the imposition of tariffs by the US administration. Normally, when the US has a recession, there's a fair chance that Australia has one as well. But that relationship's declining over time because more of our economic relationship is with China, with Japan, with Asia. And particularly in this circumstance, if it's the US that takes itself down and the rest of the world to a lesser extent, then, you know, I think we could be okay.
Do you believe free trade is still possible if the US no longer wishes to participate?
It's going to be free trade in a very different way because the US has been so central to that relationship over time. But I think the rest of the world has seen just how strong the benefits to free trade are. And so I think lots of other countries will want to continue with that. I mean, just last week we've seen that Japan, China and Korea are talking about negotiating a free trade agreement. So I think increasingly we'll see free trade excluding the United States. And it's important for Australia to be involved in that because we have benefited so much from free trade.
Jonathan Kearns, thank you.
Thank you very much.